and even today, down payment assistance programs, which is what we're gonna be talking about, and some grants, this is only gonna cover the top edge of it. So what you're really gonna want, sorry, I clean up my space here. What I really want you to take away is that we do have so much to offer. So let's talk about the deal. Let's figure it out and where we can place it. And helping your clients find the cheese is just gonna kind of get your brain moving on the different options that are out there. Notice I do not have anything on the screen or anything. It's because I do not like presentations. I can't sit through them myself, so I don't expect anybody else to. So I'd really like to do this as a discussion format. These papers in front of us are for you to take notes on and to kind of keep us on track. But if we go off track, that is completely fine with me. So please stop me if you have a question or something spurs in your head that I say that you ran into a scenario. Let's talk about it. So I giggle about this finding the cheese because when, I don't even want to tell you how many years ago, but well, it was about 30 years ago. I was doing portfolio lending and we did stuff in a committee type basis. And I was in my early 20s, and how they would talk in committee was in slang. And for the first like 3 weeks, I was like, what are they talking about? And they'd be presenting a deal and they'd be like, yeah, the cheese is coming from here and this, and they're buying a tin can, and I didn't know what anyone was talking about. So the cheese, the money, is something that has always stuck with me. So that's why I named it When Your Clients Can't Find the Cheese. First one we're going to go over is really the most widely used one and the most cost effective for your clients. And that is the MSHDA 10K down payment assistance. Has everyone had an opportunity to work with this program? Okay. It's really not a difficult program. Obviously, it ties in with conventional and FHA, so you might have a conventional loan that goes MSHDA, and you might have an FHA loan that goes MSHDA. Now, what people also don't understand is you can buddy that up with RD and with VA. So if somebody has a VA loan that they're doing 100% financing, but they don't have their closing costs, you can still tack on the MSHDA down payment assistance on top of those RD and VA loans. The one thing with MSHDA is the buyer always has to have 1% of the purchase price into the deal, their own cheese. So they have to have, but their own cheese can be a gift, their savings, coming from their retirement, or they can sell an asset. So, and really that's one thing to remember. That's where money can come from in all loans.
Say that again, Judy.
A gift, I mean, obviously checking and savings account, they're a gift. Now I screwed up. Selling an asset or retirement.
When you say a gift, if someone else is gifting that to them, do you need their bank stuff information? Is that what it is, like their bank statement?
FHA and conventional has gotten rid of that. I have to be honest, and it's something I have to look up. I'm not sure RD and VA have gotten rid of that, because that was just about 6 months ago that happened. So, I mean, normally when we're doing a MSHDA loan, it is FHA and conventional, and it needs to be a family member for a gift. It needs to be a family member or somewhat of close relation, and they just need to provide the gift letter, and then we need to show that that gift came from the account that is on the gift letter. So that could be by a bank statement. The easiest way to do it, which we try to coach people into doing because it's much less paperwork, is to just have the giftor gift or wire the money to the title company, And then the wire receipt from the title company shows us the account number it came from. So that is something that my assistant Scarlett, who you guys will love, she's a Southern Belle, your clients will love her too. She'll be like, oh honey, can you just gift it please? You know? Or can you just wire it? It'll make things so much easier on all of us. So we start that conversation in the beginning. So that's by far the easiest way to do it. I am gonna put a note, on my notes.
So I've got a question already.
Yes, this is what I love.
We use a, earnest for our trust deposits. So the money from the buyer for their first money deposit is wired into our account from earnest, which has a level security.
Yep,
Is that gonna work for you?
yes, but we do need the borrower's bank statements to show that they had the funds. So we show that those funds going from their bank statement to Ernest. If that makes sense. But we no longer, at least on FHA and conventional and questioning our DNBA, no longer do we need the donor's bank statements to show those funds. They can provide them, but let's not get too in the weeds. We try to make it simple. So back to the Mishta 10K DPA, 640 minimum credit score. There is no 639. I mean, that is a hard stop. I have credit boosting software where if someone is at that 620 mark, even 600, that we're like, okay, this is a little bit of a marathon versus a sprint. I might not be able to pre-approve you today, but here's what you need to do to up your scores to that 640 mark. And then we go from there. I have a client whose offer just got accepted. Actually, it got denied last night and was accepted this morning, and which was really cool. And their situation, sorry if I'm going, I remember things with scenarios. So their situation is they are almost exactly a 640, so they qualify for MSHA. But FHA did not like the fact that their scores were so low and they were coming in with down payment assistance, that they didn't have a whole lot of their own cheese into it. So I played around with it a little bit, and it will accept it if they have another 3 months in reserves. So 3 months payments in their savings account. So we restructured the deal with, it was $7,000 was about 3 months. We restructured the deal with having a gift of $7,000, and we can show that in their bank account, and deal's done. We can do it easily. They can spend that money the day after we close. We just need to show that they have it and would have had access to it. So, sorry if I go off track. I'm just letting you guys know that we really try to work these. You know, it's not just one, oh, didn't get approved eligible. No. I've been, as I was mentioning, I've been doing this for 32 years. I know how to massage the system a little bit. We still have to prove what we're putting in the system, but there are ways to massage it.
Not off track, that's actually really good information to know. I think we're all quiet just because we're eating, but.
Yeah, no,
But no, that's really good to know.
okay, perfect. Yeah, let me know if you guys are like, yes.
I was going back a little bit, because I know a lot of people probably work with clients, or I've heard people in this room say, yeah, we just gotta work with to get their score up a little bit, or this or that. You said can you give us like if we're trying to coach our clients, what exactly should we tell them to do to get their score up? Obviously, you know.
Don't tell them anything.
No? Okay.
Credit scoring makes zero common sense, and I don't trust what I even say to get their score up. So for instance, a client could pay off a medical collection and it could show as a zero balance, and for a few months that will bring their score down.
Yeah.
pay off your car,
Oh, yeah, definitely.
and
Close an account.
close an account, brings your score down.
Which makes no sense, right?
Yes. So my, as I call it, credit boosting software will tell you what to do,
Okay.
how much to pay it down to, and how much approximately that will raise their
So
score.
that would come from you in
Yes.
the process, or you
Yep.
say,
I would much rather, it's when people are like, well, I'm working on my credit, so, you know, I'll get
Yeah.
back to you in about a month. And I'm like, please don't do that. Let my machine tell you what to do
Based
with
on
your
your
credit.
scenario, what would it be different,
Yes.
obviously, for this person or that person?
Yeah.
Yeah, that makes sense.
But I mean, a rule of thumb is pay your bills on time.
Oh, yeah.
Keep your revolving credit at 30%
Yeah.
of the balance of what you're allowed to take out. And, don't constantly be opening new debt. Yes, that 0% credit card looks great to transfer things to, but if you're gonna buy a house, don't do that right now.
So it's Julie, so I'm clear, if someone says, I'm paying off all my credit cards before I buy a house,
No, please don't.
and
Yeah, that's what you'd say.
well, how am I gonna get approved for a loan if my DTI is too high?
Let me have you talk to my friend Julie.
Okay.
And if, I'm gonna look at that, and then I'm gonna go, okay, you need to pay down your credit cards to this level, or maybe you do have to pay them off, you know, but I would really not like if somebody used all their money to pay off these credit cards that they didn't need to, where we could have used more money to get them approved to put down on the house. Cause remember, the more pluses you have on a mortgage, the more likely you are to get approved. And I recognize a few faces from last year, so I don't wanna double do myself. But you kinda wanna think of when you're getting an approval, there's an approval line right here. And if you start out and you have bad credit, you go under the approval line. If you have mediocre credit, okay, you're at the approval line. Now you have mediocre credit, but you don't have any assets. You just went underneath. Now you have short job time. Just went underneath. But let's reverse it. You have mediocre credit and you have a lot of assets and 2 years job time. It just brought us back to that mediocre level. Kind of the same as someone has really good credit, so starts above the line. Yeah, they're not gonna really care too much about hopping jobs 6 times over the last 2 years. You know, so it's really about balance. And so if someone comes to you with bad credit, no down payment, and no money, or bad credit, no down payment, and short job time, you got work to do. I always say, you know, my role is obviously to get loans closed, because otherwise I wouldn't be able to feed my family. But I always look at it like, okay, we maybe can't do it right now, but we're gonna get you there. And from the people that I say that to, it's actually rising. It used to be very disheartening, for me anyways, because I put time and effort into making a plan, and people would be like, that's too hard, I'm not gonna do it. That still happens often, and those, I can usually pick them out right away. Those are the people that, it's everyone else's fault that they're in this position. But there's definitely times where there was a medical situation, there was a divorce, there, you know, life circumstances that people are like, oh my gosh, just tell me what I need to do to get there. And those are my favorite ones to close, when we finally get them there and we close them in loan. Those are, I mean, that's what makes my heart sing, or beat, I should say. Another hard stop on the MISTA, anything else there? Now that I got emotional. Another hard stop on MISTA is hard stop on 45% back-end debt-to-income ratio. And what that means is 45% of gross income. Which that can stop people a lot, and that's why a loan amount would be lower than what we would normally do have other programs, which I'll hint to over here in the next few pages, that we can do for those people, but they're more expensive. And so it doesn't always make the most sense to put them in there because it's taken over by the interest rate and closing costs with the amount that, even though they're letting us go over that 45% debt ratio. So I'm looking at all of that then, but that is a big hard stop with Mishta. Also, hard stop with Mishta is if people make too much money. So I included, I think, on the next page, and of course, I'm not kidding you, I wrote this on like April 18th. And the following week, they came out with new numbers, which I did not have time to go in and change it. It's not by much. For instance, the targeted area, I think, is moved up to 122.8 a year, something similar. So these numbers change. It's not by much, and you can always find them on the website. A big change that also happened when they changed the household income is, excuse me, that's why you don't put it while you're doing the presentation. If you guys all remember, the loan limit for Mishta, or not loan limit, the purchase price limit for Mishta was $224,500, which was limiting a lot of people. That has just been moved to $544,233. It's very insane. Now, with the income limits that are on this, I don't foresee us doing many $544,000 purchase prices and using Mishta, but it is possible. Well, I mean, maybe they have 3 or more people in the household, maybe they have more of a down payment and they just want to use that extra $10,000. So, yeah, but that is a huge improvement. Where I see it helping the most is that $350 price range that has been needing more of a down payment.
So I see you, Mr. Abbott, Crawford and Kent counties. Obviously, you can do Ottawa County
Yes,
or Kalamazoo, Butcher County, Allegan.
yeah, we can do all over the state of Michigan on this. In fact, I closed a loan last Friday in Marquette, Michigan Tech, on one of these. Yeah, I only included Kent County because, I mean, the list is long, and just to give you an idea, like I said, you can go to the Mishta website and find the targeted area. It's a one sheet of paper. I just included this on here to give an idea.
Julie, what is the interest rate conventional Mishta buyer pays? Cause to me, the biggest thing is with these interest rates bouncing all over God's green earth.
Yeah,
The nice thing about getting somebody qualified in Mishta right now is you can tell them what their interest rate is gonna be. Could you share
for the
with
most
us?
part, yes. I mean, it can still change, but it doesn't change often. This is another thing. So Mishta, if you're using the down payment assistance, the current interest rate for FHA and conventional is 6.625. Now, there's another portion of Mishta that not many people sell. And the reason they don't sell this is because as lenders, we do not make as much money off of Mishta loans. So people try to skirt away from this next product. If people do have the down payment, and they don't need the down payment assistance, and they qualify with all these other hard stops, again, don't need the down payment assistance, the Mishta interest rate is 6% today. So it is very much worth to look into that.
And what's required for the 6%, what down payment do they need?
Any, like 3% if it's conventional, 3.5% if it's FHA, 100%
No,
financing.
but I meant for the 6% interest rate, they have to have a 3% down payment and their own closing costs?
Yes,
Okay,
Yep.
so you're basically talking not that much money to get a 6% rate where it's not available anyplace else.
correct.
Unless the checking time is different.
Correct, but if other rates go down, Mishta rates will go down too.
So, I had been under the impression that Mishta rates were locked in. Is that not correct? I thought this issue were locked in for now.
Usually if Mishta changes rates, we get a notification the day before.
Okay.
So it's not like, oh no, you know, so if I had any Mishta loans that were out there, they will tell us that it has, you know, you have to lock in. Now, you have to have a property, you have to have a purchase agreement, all that stuff. But if Mishta rates were to go up, I would, you know, look at all my Mishta pre-approvals and go, oh God, did it just move up to 6.875? Who did that toss out of the current approval?
Okay. And when you say 6.625 for people who are having down payment assistance, is that including the FHA insurance in that interest rate, or is that on top of that?
The FHA is on top, the PMI or MI is on top of that.
Okay, so the MI for a conventional loan would 5 or 10% would be on top of the 6%, and the mortgage insurance for FHA would be on top of the 6.62.
Yes.
Do you know about what it's running for FHA?
Well, FHA is 0.55% every time.
And conventional depends on the down payment?
Depends on down payment, credit score, all the different credit companies run different algorithms. So one client, you know, with a 660 could be paying 0.126 or 1.26. I'm making these numbers up because it really varies all the time. But a client with a 780 could be paying 0.47. If that makes sense.
What range do you see them going in?
Everywhere. They're looking at,
They're 1% or less.
what do you, I see them from really 1.44 down to 0.27.
I just found the range.
Yeah, but it could be different, you know, because they're looking at kind of that same line on how they're pricing
Depending on the
mortgage
strength of the
insurance.
buyer
Yes.
and the down payment.
and the down payment, yep.
Okay, I just like to have a general idea, what does every client ask you, what's the payment gonna be?
Yeah,
Well, I have found, and this is just me, that if I tell them the payment's more than and it ends up being less, it's never a problem.
right,
I don't know if you've run into that.
yes, absolutely.
If I tell them it's less and it ends up being more, I don't know.
Yep, that's the problem I run into when I'm being shopped. Because I am very open and I tend to do my loan estimates high because I don't want surprises at closing. I want things like people to, you know, 3 days before closing when they get their CD to be like, woo woo, you said I had to come in with 6,000 and I'm only coming in with 4,500. I get to buy my new dishwasher, you know? That's way better than the other way around.
Julie, is it a good first practice to quote payments, or should we say, have my lender give you that
Have your lender do
information?
it. Absolutely. And if you've ever gotten a pre-approval from me, I send the pre-approval letter. I put some notes in there on anything that we may need to watch out for, or if someone needs to pay down a $300 credit card or something like that. And then I put proposed estimated payment, and I show them exactly what that would be. Now it's estimated, and I put these notes in there that I'm estimating taxes and insurance, because that's property driven. But everything else should be about right, and then I estimate what they need to bring the books. I'm usually pretty good at that. Not to get too into the weeds, but around July, when new tax bills come out, there's always a surprise at closing. So, and all July closings are a little wonky. So, especially if, you know, one was supposed to close in June and then closed on July 2, for example. tax bills that come out, and they're new numbers than what we've been working with the whole time. So, there's no way for me to control that. Sorry.
I was just gonna ask you, on most of the time, especially now in this economy, a year after the buyers close, their payment skyrockets because tax bill was readjusted to the sale price. Is there any way to compensate for that?
No way, so that's a catch-22, because I have those conversations, I put it in writing. In fact, once someone finds a property, when I send over their first introduction to-do list and what our next steps are, I send over the current tax bill and I say, this is the current taxes. These are going to go up once they're reassessed. They could go up tremendously, and we have a conversation about it. Do they ever remember these conversations? Do they ever? No, because when we're approving somebody, we have to go off of, and this is Fannie, Freddie, FHA, what the current tax bill is that we pull off of BSA.
I know most agents and lenders don't say anything about that, so a year after they close, they're in a real tough position.
I agree, and I do say it, I put it in writing, and no one listens. So, I don't know what else to
It's
do.
a selective memory.
Yes.
Yeah.
Can you talk to them and try to put a little more money into the escrow account so they can be ready for it? Or
They can't.
No?
There's massive escrow laws that we can get fined a ton of money if we have too much in an escrow account.
I mean, so it's nothing that you can do about it?
No.
Yeah.
It's the
Because
laws fighting against each other, really, but that's why we don't do that.
But
Otherwise, heck yeah, we would.
Geo, what I do for my clients is I'll estimate what the new taxes are going to be, and I'll tell them how much cash they're gonna need, estimate, how much cash they're gonna need, so they need to set aside $200 a month
Oh, I see.
or $300 a month, if they're the kind of people who will talk with you.
Where do you get that information, Susan?
I go to Michigan Property Tax Estimator. I divide what we paid for the house in half or more. I put that in to the tax estimator, and then I subtract the difference between what they're currently paying and what I expect them to pay next year. And then I break it down into a monthly amount.
Again, I'm a brand new agent, is that a good thing to make?
Yes.
Yeah, I think you have to warn your people, because the last thing you wanna do is call them after they bought the house a year later and they're furious that nobody ever told them.
Yeah.
And they'll remember that you need to put aside $100 a month, or you need to have $1,000 set aside, because when they reassess you in March, if you don't have that money set aside, they're gonna double your escrow payment, and it's gonna kill you. 'Cause that's what they do.
Yeah, and with my clients, with first-time homebuyers especially, I show them where, when you get reassessed, when you first buy a home, you're gonna get what's called a tax estimator or something. It's a piece of paper, it says it's not a bill, but it shows you how much your property taxes are going up in June. And you get it months before your property taxes go up. And I found one on the state of Michigan, I just found an example, and I show it and I print it to my clients, and I circle, when you get yours in the mail, this is what you're looking for, this is what you need to save. They're not, the state doesn't care. They're gonna take your money.
Right. A couple things to add to that. Number one, it's not only property taxes, especially in the current insurance environment. Insurance is being raised ridiculous on people.
Yep.
So when somebody's escrowed, the good news is we are going to pay the state, and we are going to pay your insurance. And then what we do is we take that overage and annualize it over 12 months. So they have an additional 12 months to pay that back. Now, little secret, if your client is really stuck they can call their servicer and say, I'm stuck. And a lot of times, these servicers hire $10 an hour employees, and it's very frustrating. But if they get to the right person, which I will help with too, look, we're gonna put these folks in a bad spot, can we spread that overage over 24 months? So, the servicers never want to take a house that is very expensive and they lose money. So there's no way that that is what they're trying to do, but, so they're gonna help figure it out. But those aren't the boilerplate plans that get sent out to them. So, but there's always a way to work with it. Okay, I think that we covered a lot. One thing on the Mishta 10K DPA is the client has to be a first-time home buyer unless you're in a targeted area. Kent and Ottawa County make it a little bit difficult to figure out where the targeted areas are. So you always have to look at the tax bill, and it has to be in those specific areas that I listed on the previous page. Almost the entire rest of the state, almost, I'm saying, is a targeted area. So I live in Mecosta County, that entire area is a targeted area. So they don't have to be a first-time home buyer to use the Mishta program in that area. And remember, then, if you're in somewhere like Mecosta or Ionia or different places like that, you can use RD and the Mishta DPA. So,
Well,
that's
so it's an
exciting.
agent and I don't know a lot about, when I'm brand new and I don't know all this stuff. And, even.
And I would hope you would never know all this stuff, because then I would not have a job.
So don't be embarrassed to ask you questions or think it's a dumb question.
Nothing is a dumb question, and I'll tell you why. I mean, just like I wrote that down, I need to double check myself on that. When I say we have 300 loan programs, guess what? They all have their own set of guidelines. Fannie Mae's guidelines is 2,600 pages. And then monthly, they have new updates that come out. So if a lender, you have a funky deal, if a lender, me, says to you, I can't whip this pre-approval out in 24 hours. You don't want me to, because I need to research that and make sure we're doing the right thing. I never want to waste a client's money on inspections or appraisal and come down to the end and we're so long. So,
And if I may add, that's the difference between an online lender and a real lender, a hands-on lender. Because we all know, like, online lenders, nobody's looking at those files to the bitter end. After you spend the money on the appraisal, after you spend the money on inspections.
Absolutely.
and I don't want to do that, because the second I start doing that, my name goes into the mud and people won't accept offers from me. So I never want to do that. So, yeah, I mean, most of the time, I was on the road yesterday, I got a call at, obviously, right before I'm walking out the door. Can you pre-approve this one? We're in a hurry, we wanna make an offer tonight, blah, blah, blah. I said, I am not getting back to home base till 7 o'clock, but I will take a look at it then. It was stellar, it was easy, the client had uploaded everything I had asked, so I saw income, I saw assets, I saw everything. 812 credit score, yup, they got pre-approved last night. But with a 640 score and something funky, probably wasn't gonna happen. So. Okay, this next one's really exciting. Have any of you worked with the $25,000 Mishta Down Payment Assistance Program? Okay, this came out at the end of February. I closed my first one 2 weeks ago.
Ooh, that's
Yes,
exciting.
it is, and it went extremely smooth. The biggest things on this particular product is documentation that's needed. So it has all the same guidelines as MISTA, 45% DTI, 640 scores, same income stuff. But if their parents have not owned a home in the last 3 years, then they can qualify for 25,000 down payment assistance. Now, in order for us to prove that, we ask them for their birth certificate. And we do a fraud report on them and parents to see if parents have owned that property. So this isn't something, and fraud reports cost us about $750, by the way. So it's not something we do until the very end. So if that's something that your clients are like, oh, well, it was 2.5 years ago, they won't catch it, yes, we will. And everyone's gonna be mad at the very end, and it'll end up being my fault. But no, because it's a very strict rule. They can't have owned a home in the last 3 years.
Yes. I have someone that they just took the class last week, the course and stuff. With birth certificates, they do have Mexican birth certificates, although they are here legally, but do you need those to be translated, or how would that work?
I have no idea. I will have to ask that.
And also, like, if they don't have any birth certificate, what should they do? Because a lot of the buyers from China, like in their 40s, 50s age, when they were born, there were no birth certificate.
So, are they both all their families here, or are they adopted, or what?
No, they're just they immigrate here,
Okay.
and their parents are in China, and they need to buy a house here, and there is no birth certificate that they can provide.
I have to ask.
Okay.
See, this is why I like these questions.
That's really interesting.
Yeah.
Now, so if you have a lot of the cultures that our agents work with, they're multi-generational. Can you buy a duplex for a family with this program? Or does it have to be a single family home? Because I do know that some of us are looking at more than one generation.
I have to look into that because Michigan has gone back and forth on duplexes in general. So I need to look into that. Now, it's also what happens when you have so many people in the household, even if they're not all on the loan, that income guideline is based on total household income. So even if they're not on the loan, but grandma and grandpa are gonna live with you, and so is mom and dad, and they all receive Social Security, and you make $50,000 a year, you're probably gonna be over the income limit. So that's another thing to watch for on there. See, catching me and stuff in this. You brought up a really good point. So the other strange thing about the $25,000 down payment assistance program, and I find this odd because I've had a couple people that have been pre-approved for it, and they kind of went off the rails on me because of this very reason. They have to take the class in person. With the regular 10K DPA, they can take the class online. They actually have to enroll and take a class in person for the $25,000.
Virtual too, but it has to be face to face,
Yes.
right? Like, so
Yep.
like the regular 10K is like just an online course, you don't have to see.
Right, it
anyone.
takes like 15 minutes
Yeah.
and you're
It says
off
3
your
hours
computer.
and it's
You
not.
print off a certificate.
But then the other one that, like you said, it's either in person or it has to be like a person on the screen.
Yep, and it has to be from certain people in each county.
Yeah.
So, and that list would be given. So, but I have seen people fall off the rails for that, and just in this short period of time, and to me, do it or move on. Like, if you can't take a class and someone's trying to give you $25,000 at 0% interest with 0 fees, you're not ready to buy a house. I wanna back up to this because I never say it's a grant. Michigan is not a grant. These loans are paid back, but 0% interest and 0 fees. So they pay it back when they refinance or when they sell the home. So that could be 10 years from now. But it is tacked on as a lien to the property. I see loan officers putting it on Facebook that it's a grant, and it is not.
So if you live, I thought I heard if you live in it a certain amount of time, you're not paying it back, but.
That used to be it, and that's not the case anymore.
Okay.
No.
So say you live in the home 30 years, is that entire amount due at the end of the mortgage then, or does it
Yes.
continue on?
It's,
Cause that might come as a surprise to some people, at 25 grand, you think you got it paid off.
I have
And
to
all of a
look
sudden
at
you get
that,
this nice
yeah.
little bill that
man,
says,
you guys are
It
deep
is-
today,
I
making me
did-
work.
So it is due at the end, I asked if there was.
I know it is due at
payment
the end,
plans,
but
and
is
there-
it all due, or,
It's all due, they don't have payment plans, and
Oh,
what.
so then you're
this
taking
is
out a
from,
second mortgage on your home to pay off that 25
Yeah,
grand?
they would have to pull it from the equity at
So now
that
you got
point.
another 10 years.
Oh,
That was from Nancy Baker.
okay, did you just take a class?
They don't set
These
that
are
up
good
to pay off
questions.
slowly throughout the
She
mortgage?
said
No, you're not paying
Is
anything
it-
on it.
Is the 10 years? I mean, is it an option for some, like if they
No,
know it's
No,
due?
there's
it's
no
due,
way to
it's
it's
start
not
it.
even in your payment at all.
Is the 10K,
No,
No,
Same-
the same,
so-
yeah,
same thing.
same way.
So
So
let's
it-
say you pay
you
off
have to pay
your
the
house.
10K back?
You owe the
Yeah.
10 grand back,
or the 25.
or the
No,
25.
but you amortize out your loan or you
No.
accelerate your payment.
That just sits there.
It just sits there, that's 0% interest.
Yes,
0%.
but,
So you can
Do like Michigan?
I'm sorry, what is your name in the blue?
Raina.
So you gotta,
Raina?
gotta warn your folks.
Okay, but you just said, Nancy said, when it's paid off after 30 years and it's paid off in full, it needs to be
If-
It has to
paid.
be, and I asked her, is there a
So,
payment
not
plan?
guaranteed
And she's
appreciation.
like, no, it's paid in full, and I was like, well, where would they, from that, at that point, they're expected to pull it out of their equity.
Yeah.
So, yeah.
Okay. Thank you for answering it.
Yeah, no, I have all the questions, so.
And just remember, nothing's free.
Right.
So,
I mean, it is free,
No,
because
it's
they
not.
didn't pay for
You
it.
will pay for it.
Right, but no, they don't pay for it, they pay it back. It is a loan that costs them nothing, but they do have to pay it back.
It's no brainer.
so how, if I go to list a house 5 years from now, of course, we all know our sellers remember nothing.
Right.
Exactly.
How do I know if it's one of those mistas that if they lived in it for 10 years, they don't have to pay it back versus the mishta that they have to pay back?
That, the not having to pay it back thing or it slowly getting rid of it has not been around for a really long time. Like really long, like at least 15, 20 years.
Okay, so,
So that, you probably won't find many of those. But otherwise, I would say title, in your chain of title. Because the mortgage will show on the chain of title.
and what you guys need to remember is that your sellers will not remember this, okay? They just
They won't.
won't remember it. It's
Not only
just
that,
Human nature.
as I have seen just recently on social media, they're being told differently. So, doesn't matter if they remember it. It's very disheartening to me that that's not
As
happening.
far as the parents owning a home, does that include mobile homes?
In a park?
Yeah.
No.
Okay.
I asked that question specifically 2 weeks ago. It doesn't include vacant land either. Now, what that may result in, both of those items, is us having to dig in more and request more paperwork to prove that it's in a park and to prove that the land is vacant or that type of thing. So, but no, vacant land and mobile homes and parks do not count.
Is the house price the same as the 10K?
The 544, 233,
It was like
224, 5.
Okay, so.
It was huge. And we were about 10 10 years behind the 8 ball on this in comparison to other states. So I write loans in Florida and Colorado also, and it was just maddening to me to watch these people in Colorado being able to get down payment assistance on a $350,000, $400,000 house, and here we were only at 224.5. So we were definitely behind the 8 ball on it, but we're not anymore. So let your clients know. Let's look at this program.
So are we qualifying these buyers with the actual sale price or the sale price minus the $10,000 DPA?
It's the sales price. So
Like they might be $10,000 off from, you know, income, debt to ratio. So that, my question is, if that's true, then you take away that $10,000 down payment, and then their you know, their mortgage amount goes down, so it's based on sale price, not, you know what I'm saying?
I think you're asking, I need to understand your question. So when we're looking at at the debt to income ratio,
Like if you're buying a house for $225, but your clients can only afford $215, can they qualify still for that house if they add that $10,000 down payment assistance in, or no?
so typically on just so you know how numbers usually shake out. And I haven't, obviously this other program with over the 224.5 just came out, not the end of last week, but the end of the week before. So I don't have any of those loans to talk about, which is higher than the 224.5. At 224.5, if someone's doing the 3% or the 3.5% down, FHA conventional, the client still ends up bringing between $500 and $6,500 into close. So it's definitely not a 0%, because if you're looking at 224.5, that's 246, that's $7,500 right there of the 10 grand just for that down payment. And then closing costs.
So they can't include that DPA in with their qualifying amount. I've had buyers before that couldn't qualify for $1,500 over, you know, it's like we're so close, but they, you know what I'm saying?
So,
If they,
yes, so for instance, the 25,000 one that I purchased, that I closed on last week, with only using the $10,000 DPA program, he only qualified debt to income wise for $180,000 loan amount. So we had to keep that loan at $180,000 because his debt to income otherwise would go over the 45.
so, okay.
He was looking in Ionia County, and the difference between $185,000 house and a $200,000 house was huge.
Yeah,
So instead of just using it as 3% down, that 25,000, we used it as 10% down to get his loan,
okay,
or 11%.
got it, yep, that was my question.
And put it to 180.
Yeah,
Yep, sorry,
okay.
we went around the world on that one, but we got it.
Okay,
So, yeah, I'm gonna play with the numbers to get someone to qualify.
okay.
Any more questions on that? Again, once you have a file that these things that, all I want this to do is to spur red flags. Like, oh, you might have an opportunity here, then have them give me a call.
So Julie, I would look at this sheet and say, I got a guy with a 580, I'm gonna do anything with them. According to your sheet, maybe I could. On Pathway FHA repayable.
Yes, on that program, yes.
So there might be a different program.
Yes,
That we should maybe make a reach out to you and say,
100%.
I got turned down, but is there any way you could save the deal?
100%.
Okay.
That's really what I'm asking.
And that's what these are for, it's just a thumbnail for us, really high over,
Yep.
and say, would that work? Here's my situation.
And really just never want you to tell a client there's not an option out there. You know, because even if there isn't an option that I see, we're gonna try to,
Yeah,
6 months from now, get them in a position to get an option.
So we have more hope of closing more deals because
Yes.
we're not as out of the ballpark as we thought.
Right.
Is that what you're saying?
Yep.
Well, it feels kind of exciting.
I have another question, and, when, so like for the, say the 25K, it's up to 25K, cause it depends on the purchase price of the home, right? So, I don't know
No.
if I, no?
It's up to 25,000, but I'm always gonna try to maximize that 25,000, because that's at 0% interest rate.
Okay,
So even if someone wants to buy a $50,000 house, I'm gonna use that whole 25 and do a $25,000 mortgage. Because that is the least expensive for them.
that I did, so, okay, so I thought I heard something, I was like, maybe I heard wrong, but that was, okay.
Sometimes right at closing, because it's difficult to change a loan amount, the clients can't get anything back at MISTA, or on a MISTA deal. So I have had times where how taxes worked out, and they paid for their appraisal, like all this stuff, and now they're getting cash back. If I have to make a last minute decision, meaning really 3 days before closing, the only way to do it and us to close on time is to cut back the down payment assistance $500. But I try not to do that, because why would I want them to pay 6.625% interest on that $500 when they could be paying 0?
Yeah, okay, thank you.
Big question. Do you have any other languages spoken besides English?
Yes, a gazillion. Our mothership, we are one of the top 10 lenders in the country. Our mothership is based out of California, so we have a ton of interpreters. I would have to make an appointment and we'd have to figure that out, but yes, we do.
So you would have Spanish,
Yes, for sure,
Mandarin.
I'm sure. But it would be, hey, this might take a minute to be able to put everybody on the right
I
time
think
zone.
that's our main thing that, or at least for Gio and I, and it's like a lot of our community they speak Spanish. But, and some of them get by with English, but I feel like for sure with something as important as a home, they should know, all the
Exactly.
things, but you're really knowledgeable when it comes to, like, lenders, they're all great, but there's some things that you brought up that I'm like, oh, I didn't know this, and so that's really cool. Obviously, not that I know everything.
A lot of times they do know it, and I'm not trying to dog other lenders, but a lot of times, even newer lenders specifically, like the program, the MISTA program without using the DPA. Management, and I've worked for a place like this before, purposely didn't educate us on that program because the MISTA loans we make less money.
Yeah, okay.
But there's also some of these lending institutions, there's differences in levels of training too for loan officers. And we had one organization in Grand Rapids that grew exponentially. And God help you if you called in on the phone and talked to a lender then, because you had no idea if they had any training at all, because they were just filling in the slot. So there's that too. It's a lot of, I'm sure it's a lot of education to learn how to be a LO.
Yes, and it's gotten crazy since 2008, 2009. So, this is my, I guess, life's work. I do this all the time. Yeah, and unfortunately and fortunately, not wanna know how you learn the best lessons?
Making mistakes.
When you screw it up. And I've done that too. So that's how I really know, some of these. And it's unfortunately, because, over the last 32 years, I have screwed things up. So,
You can do ICCF.
we don't do ICCF. I just put this on here because ICCF has a program, it's actually closed right now, as of last week.
That's what I
And I don't know when they're gonna reopen it, but this is something that you're gonna want to send your clients to get them on a waiting list or whatever, because basically, once they have like a savings account, that once they reach 1,000, ICCF will gift basically as a grant another 4,000. Or 3,000, I think it is, so they have a total of 4,000 to put on a down payment.
And then what about ITINs?
Can't do MISHDA with those. Really, I don't know of any down payment assistance program with ITIN.
Or ITINs, okay. We have a lot of those.
I know, and I am not completely versed in those. Like, I can't be up here and spit out stuff, because I don't do a lot of them. Obviously, I can research like crazy and know where to find the information, but there's so many ins and outs to those and so many different program choices, it's difficult for me to, it's case by case.
So if I'm on a government assistance program and I wanna buy a house, my best opportunity then is to deal with ICCF, send our clients to deal with that. I'm income based, I'm getting government assistance, paying my housing.
So ICCF's program, and I kind of laid out I mean, for a one-person household, they just can't make more than 70,500. So they don't even need to be on any type of public assistance.
And it's just going, and I went there a few weeks ago and their wait list is, closed
Right,
for a while,
it's
and then
closed.
they reopen it.
Right, but
we don't know
it's,
how long.
but hey, go check. When
Yeah.
is it getting back on? I
Yeah.
mean, that money is valuable.
It's there, yeah. I do have a question on the 7,500. I've heard lenders mention that it's just really not really worth it to mess with it because it's really hard. Have you had any good experiences
Yes,
with it?
I agree.
Okay.
I agree wholeheartedly. It is, first of all, the income, the household income levels that I have on here are so low.
Yeah, like how do
How do you even find a house
Right,
that,
that's on the market, that's
Correct.
it's completely disheveled.
not to mention, the last time I closed one of these, which was actually 4 years ago, and they were so antiquated that we had to go back to like 1992 and print the package out, put it in a stacking order, deliver it there, and then we waited forever. Even me calling them and asking them questions about this program, I don't get an answer. So, although it is there, this program is there, let's do a 60-day close, at least. And just because I'm telling you, we got no control.
I don't know if you know about this or not, but right near Eastern and Alger, the old St. Joseph Seminary got turned into some kind of,
So we used to play IBL basketball, by the way.
okay, as some type of a subsidized income or housing.
Okay.
Do you know anything about that project?
I don't.
I kinda think it's running through ICCF, but I haven't.
Possibly, that would make sense. This is how I ended up getting a space at the table here, but we closed a loan with a client using Section 8 income. We can do those loans. In fact, really anybody can. They will say that they can't because they don't know how, but they can. They are in FHA and conventional guidelines. Now, you cannot use down payment assistance with those programs. Can't use MISHDA, can't use, with the particular buyer that we closed, I checked with all these other programs too. And no, because all those funds come from the same spot, so they'd be double dipping.
That makes sense.
Yeah. So the rest of these, I just kind of, we covered a lot of ground, but I, again, want to keep your wheels turning a little. So for instance, this Lakeview 4% conventional DPA. All the rest of these programs are more expensive than MISHDA. So that's not gonna be my first stop. If they don't qualify for MISTA, then my next step is, now I'm gonna look at these programs. So Lakeview's conventional DPA is 4% of the purchase price, but they allow for 140% of the area median income. So if someone makes too much money for the MISTA program, that's when I look at the Lakeview program. I used to look at it for higher purchase prices too, but we don't have that problem anymore after a week and a half ago. So, kind of the same with the click and close FHA repayable. So these are all things that when I'm going through my head, you know, first of all, I love doing puzzles, and I can see why, because that is what I do all day. Is I go, here's all the information, let's put it together and see what puzzle I can put together. I include rural development in here, the Pathway FHA, which is also repayable, so they're repaying this second back. Okay, we also have 2 grants that my company offers specifically. One, it can go up to $4,500, but it's based on 50% of the area median income. So kind of in the same spot that the Grand Rapids DPA is in. And right now, we only have conforming products to be able to give these grants. But anytime I can give somebody this money, I want to. But again, buying a house at $49,250 a year is difficult.
Would you explain the difference between a grant and what MISTA does?
Yep, so a grant is a grant. It does not have to be paid back. What MISTA does is a 0%, 0 interest loan that does have to be paid back. So I'm gonna look at these grants and make sure that they qualify for it, and if they do, then they're gonna get it, even if they don't need it. So that's, you know, it's one of those pleasant surprise type things. I have used it, one time in an emergency situation, because my client was buying a $140,000 house in Muskegon, and everything said that this was in a targeted area. And we were using MISTA for down payment assistance, everything. Muskegon, City of Muskegon. Anyways, when the loan went to MISTA and they took the map out, that's why some of these areas scare me because of this is one of those lessons learned loans. When they took the map out, the actual line of the City of Muskegon went behind their backyard. So this particular house was not in a targeted area, and they could not purchase it. We still closed on the house because my client was in a, 50% less of income, and we were able to give the grant, and we did some magic on our end, but we made the deal work. So,
Oh my God.
yeah.
Was it showing that in BSA? Or just?
It said City of Muskegon on BSA.
Really?
My underwriters didn't catch it, no one caught it. I mean, that's the thing, people say, you have to tell from the tax bill. If I have something like that again, these other counties don't scare me, because the whole county's a targeted area. But Muskegon, Ottawa, and Kent County, I am sending that address to MISTA along with the tax bill, and I'm gonna say, is this in a targeted area before I take this loan? Because, I mean, that was horrible. I mean, we were like, by the way, we can't send a loan to MISTA until it's been clear to close from our underwriters.
Right.
So that's how far we were. We were
Yeah.
basically clear to close. My loans don't, I've never had a loan stop at MISTA because we did something wrong. Except for this one. And it literally, the line ran through the backyard. So, that scares me. Huh?
Scared me too.
I know, but those are strange guidelines we run into on all these different loan products. went on a bank statement loan 2 weeks ago. I was able to find a lender that could do it. And I spent a week pre-approving this guy because you have to do this crazy calculation. You have to get 24 months of bank statements, all this stuff. He wanted to find a house on land. I looked at the land, you know, they could go up to 25 acres. This guy wanted, the house he found and put a purchase agreement on was 26 acres. The lender who I had it pre-approved through, hard stop at 25. So every little piece of a deal really does matter. Which is, I bring this up too, when you're talking to your client, they never want to give the bank all the information, ever. And I am a safe person, they need to give me all the information. Because if I don't have it, we're gonna figure it out. And then I'm blindsided and don't have a plan on how to fix it. Or no one ever wants to tell me that they actually do have $20,000, but they're not telling me about it because they want a down payment assistance program. Okay? Well, now you have a 640 score and the system's not approving it because you don't have assets. Where if I would have known about that 20 grand, you have assets. It may have given an approval.
Juliet, we gotta,
Yeah,
how quickly are you able to return phone calls? Cause that's a big deal too, especially new agents.
very quickly. I would actually prefer, if someone were to text me first, and then I can be like, yep, I can get with you in just a little bit, you know, cause if I'm in the middle of a file, just like if it were your file, you wouldn't want me stepping out and answering
No.
that phone.
Just wanna be sure.
But, yep, I will say, I don't wanna scare you guys, this is exciting. I have a daughter getting married this year. May 8th, or not May 8th, jeez,
Oh, that's coming up.
November 8th. Yes, and it's in Tennessee, which is not a big deal because I travel all the time with work. But I am being pulled around by the mother of the bride collar starting next week because we're doing a fam jam next week. His family, our family, brothers and sisters, everybody in Alabama. So starting next week, my collar is being pulled. That I always answer my phone, this is my livelihood, but yeah, if I tell you I am not available, I'm not available. You know, other than that, I always am. So, the week of that wedding, no. And you wouldn't want me working on the loan anyways, because I'm gonna screw it up.
Thank you, Julie.
Thank you, Julie.
Yes, thank you so much, Julie.
Yes, no, thank you guys for the questions. That's what, I always do my presentations like this, like let's talk, because, I mean, obviously, there's some things I need to freshen up on too, but I feel like we learn better that way. But sometimes I have people just stare at me, and I'm like, okay, this can be over in 10 minutes.